Okay, welcome back for a new lesson. So in this lesson, we're going to talk about time frames and we'll be talking about choosing the right chart for your trades. Let's get into it. So looking at the wrong chart can make your trade feel random and you don't want that. Time frames show you the bigger picture and the right moment to trade, and that's why it's kind of really important. But what is time frame? So when we talk about time frame, it's just a period of each candle. So it's all about what each candle represents on your chart, and there's different time frame, there's different length of time frame. So quickly, let's actually look at my chart right here. On my chart, I'm currently on TradingView, and here those are my pretty much my preference time frame. You can actually have that. There's so many time frames you can have, but those are pretty much what I use often. And this right here, right? So we have the 1 minute, the 3 minute, the 5 minute, the 10 minute, the 15 minute, the 30 minute, 1 hour, 2 hour, 4 hour. You get the point. Daily, weekly, and monthly. So those are different time frames. So you can see a time frame as well as a window that you use to watch your price action, right? Because a different frame or window you can use to look at the price action and make your interpretation of price action and find your trading entry and exit. And the time frame you choose will definitely affect how you interpret the price action and how you find your entry or exit. So let's talk about the different length in general. So you can see here I have a 1 minute. So first, let's actually categorize time frame in general. So I would say we are short term. Let's actually use right here the test. Let's have like, so we pretty much have short term, and I'm gonna have as well short term. I'm gonna have medium term and long term. Oh, here. All right. So short term, medium term, long term, time frame, right? So what is considered a short term time frame? All right. So let's talk about it really quick. So anything from the 1 minute to the 15 minute will be considered short term. Those are pretty much like fast paced trade, all right, day trade, scalping. And they're usually, I would say, a bit high stress. Right, you have to be really fast on your entry exit. From 1 minute to 15 minutes, that's short term. And from the medium term, right, so we're probably gonna look at the 1 hour to the 4 hour. All right, 4 hour in general. Those are pretty much, I would say, as like a moderate pace in general. All right, we can even have the daily time from here, but let's actually focus on the 1 hour, 4 hour. And for long term, we can actually have the daily time frame, the weekly time frame, the monthly time frame. Monthly time frame. All right, and we can even have a quarterly time frame, right, to actually have really longer, right? But daily, monthly, and weekly, pretty much that's what it is. So that's pretty much the different window category of time frame in general. So this why is really important, because when you want to find a trade that you want to actually find a short term trade, that's the type of time frame you want to focus on. For a medium term trade, that's the type of time frame you want to focus on. And for a long term, you want to look at those time frame. So this right here, the 1 hour to the 4 hour, the 1 minute to the 15 minute, the daily, weekly, monthly time frame, those are windows on where you can actually observe the price action and make trading decision. And that's why it's really important to understand, okay, if you want to take a trade, what type of trade are you looking for? Short term, medium term, and long term? Or you need to actually have an idea, and based on that decision, you know exactly in which window you need to focus on to actually find your entry and make your own analysis on the trade. And you understand when you make your own analysis on a trade, you understand why it's really important to have a time frame in mind when looking for a trade. Because different time frame will show you different trends and different support and resistance, different supply and demand zone if you trade that. So you're gonna actually have a good idea about what's going on different window. And also when you use that, when you look at the time frame, it's definitely gonna actually help you to prevent over trading and pretty much trading nosy price action. And by doing that, you by default avoid taking random losses. And by actually using the right time frame, you tend to align your trading decision with your schedule and your own risk tolerance. All right, because let's say if you pretty much have a 9 to 5, you're really busy. All right, you might not be able to actually, be able to manage short-term trade and look at the price action, checking the chart every 1 minute or every 2 minutes or every 5 minutes. You won't be able to do so. All right, maybe if you have like a busy job, maybe the long-term and medium-term will be a good fit for you to actually either check the chart every day or every 4 hours. Like you can actually check it right away. You can to check a stock every 2 minutes, every 5 minutes, that's not really for busy people, right? You won't be able to actually look at each other all the time. So that's why your time frame choice is going to be a big thing, because you need to align your trading decision with your schedule and your risk tolerance as well. But let's talk about some common mistake that people do when choosing the time frame in general. So one of the common mistakes that people actually do, let's actually write it out really quick. Common mistake. One of the first common mistakes people actually do in general is actually using too many time frames. So they use pretty much 2 minute time frame and they don't even know how to combine the analysis they have on different time frame. So using 2 minute time frame at once, it's usually not a good idea. It actually creates confusion because you don't know what to focus on. Right? Another mistake is trading small time frame without higher time frame context, right? So you see people, right, trying to actually look at the small time frame, 1 minute, 3 minute, trying to entry, and they ignore about like the direction. We talk about trend, the context of the higher time frame, all right? Because here, if you're trying to actually catch a buy on a smaller time frame, so let's say from 1 minute to 5 minutes, or you're trying to find a buy on that time frame, but in a 1 hour and 4 hour, the stock pretty much moving to the downside, then you're pretty much trying to find a buy on a selling context. Right, so your win rate is really in danger. Right, there's a high chance you're gonna be losing because you're trying to buy on a really short time frame. So that's one of the common mistakes I see new traders make. Then trying to actually use a smaller time frame with no context of the higher time frame. That's why we call time frame is not really aligned. Right, you definitely actually have that in check. Right, so that's the one of the really common mistake. So all that is pretty much create confusion or noise with the main trend in general. So that's one of the common mistake as well. So definitely make sure to pay attention to that. Right, so the reason why we don't know about time frame, because we also don't talk about trading style. The time frame has to back up your trading style in general. All right, so just to recap really quick, when we talk about time frame, it's a window or your lens on the market about how you want to look at the price action, and then the different window category you can look at to find your entry, exit, or develop a trade idea for your trade. All right. Second, always check a higher time frame trend before using a smaller time frame. Right, you want to actually have a context of the higher time frame so that can actually improve your win rate. And last, match your time frame to your lifestyle and style. So that's what we talk about trading style on the next lesson. We're gonna talk about trading style and how, depending on the trading style, depending on what you do and what type of trader you are, you want to actually focus on different time frames. So we're going to talk about that on the next lesson, and thanks for watching.